Welcome back to Markets Today. It was a day when the markets had to grapple with two big news. Yesterday's inflation data, but today's historic Iran-US accord, which will bring Iranian oil back into the markets after a 12-year gap. Now, that, of course, prevented the inflation news from impacting the market. So what we had in the end was the bulls and the bears neutralizing one another. The Sensex and the Nifty ending practically on flat terrain after a choppy day of trade. But the mid-caps did show a substantial amount of gains. And there you could see the impact of the Iranian accord with several companies like Aban Offshore and a lot of oil and gas companies rising to the fore. Well, let's talk about the macros then.
Absolutely, Lata. And here's where there's interesting dichotomy in the inflation numbers that we've got in the last 24 hours, where retail inflation has shown signs of picking up a little bit at almost 5.5%. But today's number on wholesale inflation continues to be in contraction zone. Rate-sensitive stocks were down in the market. How do you read the picture?
Well, this contradiction has been with us for several months now. The wholesale price inflation is in minus terrain or contracting or in deflation terrain for the past 7 months. Now, the reason why the CPI doesn't reflect that is that the CPI is obviously food dominated. And in India, food prices have been rising, but non-food prices have been falling. Rather, non-food and fuel prices have been falling, manufactured prices. That forms a smaller part, maybe 25-26% of the CPI. That explains the contradiction. That said, the wholesale index today clearly was contracting even more than what the market was expecting. The market was expecting about 2.2, 2.3% fall in WPI. Today, it came in at minus 2.4. This is not very market moving because the Reserve Bank has long since stopped looking at the WPI as an index of inflation. It follows the CPI. It gives targets on the CPI. It gives a trajectory of the CPI. So this is slightly more academic. The Reserve Bank refers to it, but largely follows the CPI. Hence, this minus number does not have too much of an impact. It raises a little bit of hopes of a rate cut, but not too much. Today, the talking point was the CPI number, and the impact was seen in the first few hours of trading with the yields rising to 7.9, but thereafter the Iran deal brought the yields down to 7.8786, and thereafter, after an auction got done, the yields have fallen to some 1 month low of 7.82.
So as of now, not too much of a worry, or not too much to take heart from as far as the WPI number is concerned, even though it is the 8th consecutive month of a contraction. Let's now find out what experts are making of this data.
Government is proactively trying to import more of these commodities and create stocks. But history tells us that, the food economy suffers maximum because of the protein-rich items and vegetables during, this season, if monsoon rainfall is suboptimal. So I think currently we are facing a lot of uncertainty, and that is also getting reflected in the futures prices of some of these items. So yes, we have to keep our fingers crossed so far as the food inflation trajectory is concerned.
The momentum to my mind, I think the momentum in the index numbers has been picking up. So momentum on wholesale inflation has been picking up over the last couple of months, and I think that has continued. Perhaps most of it is coming from food, but to the extent we see commodity prices globally now, oil and on the back of weakness in China, a general correction in commodity prices downwards further. I think that would open up space for easing at some stage, depending on how the monsoons also pan out. So I think at this stage, this is a development which is positive.
Okay, now let's move on to the earnings space. NIIT Technology surged over 15% today to hit a 52-week high after the company reported a strong set of numbers. Consolidated revenue went up nearly 5%, while operating margins remained steady at 16.3%. Looking forward, the management said the US business will continue to drive its growth.
The growth has primarily come on the back of strong growth which we have seen in our international geographies. In fact, our international geographies have grown 8.9% during the quarter sequentially. I think the outlook is quite positive, all right. And as I mentioned earlier, the US economy itself is on a rebound. So we expect the US to really be driving growth for the IT services.
That was NIIT Technologies. Now, IIFL spiked in trade today on news that Fairfax India will acquire 26% stake in the company at a price of 195 rupees a share, triggering an open offer. Nirmal Jain tells CNBC TV 18 that IIFL promoters are not selling any stake in the open offer.
Promoters have about 30% stake in the company, and we are not offering any shares in this open offer, so we'll continue to hold that much. Fairfax India will hold a maximum of 26%, provided they get all the shares that they need for the full open offer. Fairfax India is unlikely to hold more stake than the promoters.
Right, a number of other stocks were also buzzing in trade today. Let's go across to Mangala Malu for that list. Mangala.
Well, thank you for that. The first group of stocks that gained in trade today were the oil marketing companies. All of them gained as international crude prices slipped on the back of the Iran nuclear deal which was reached. Also, IIFL Holdings gained in trade today after Fairfax announced an open offer at 195 rupees per share for 26% of the company. Ahead of Skill India initiative, which will be launched by the Prime Minister tomorrow, stocks like Aptech Limited and NIIT Limited were in focus, gained in trade today. And yes, it's the earnings season. Hindustan Media Ventures Limited posted their first quarter earnings. Their EBITDA came in higher by 27%, while the margins also expanded by nearly 400 basis points. That stock gained in trade today. Petron Engineering was another stock that was locked in upper circuit after their total income for this quarter came in higher by 38.7%, and the net profit also came in at 10 crore versus 2.8 crores last year. DCB Bank, however, had a weak quarter. The total net interest income grew at a sluggish 1%, while their gross NPA and net NPA figures also suggested asset quality weakening. And ahead of earnings tomorrow, we'll be watching a whole host of stocks. The first big one would be Z Entertainment. A CNBC TV 18 poll suggests EBITDA margins will decline by nearly 550 basis points on the back of increased content costs for their new general entertainment channel and TV. And a whole host of mid-cap stocks will also gain in trade today ahead of earnings tomorrow. Cera Sanitaryware, HD Media and Greenply Industries also gained about 11% in trade today.
Thanks a lot for that, Mangalam. You ought to have added actually the bond markets, the 10-year bond and the rupee as well, which saw a fabulous rally today after the Iran deal. But with that, we wrap up this edition of Markets Today.
Thank you for watching.